Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now Captain Finance himself, Sully.
Wherever you are watching, wherever you're listening, a big old howdy to you. Welcome to the Big Biz Show. Costa, Mary Godwin. Another special edition of Nunya. It's where we sit here and we tell you what to think, what to say, what to eat, what to do, and you're going to love it.
Is that what we do?
Here on the Big Biz Show. Before we go any further, let's say hi to the best in the business, also known as the Day Trader Quattro.
1, 2, 3.
Trace gets a little exploratory when it's just the Nunya.
The man has pride.
Yeah, I love it. I love it.
He does. Best in the business. We are so lucky to have them.
True that.
Every single show. Also lucky to have with us every single show is our Big Biz Show market analyst, one Howie Font.
Howie. Howie Jazz Hands.
Sorry. Boy, Howie, the band taking shots at you, man. You can't retaliate.
There's nothing wrong with Jazz Hands.
No, of course
Okay.
not.
Good point.
Anyway,
There's a shot at
I'm just gonna sit here with the backdrop.
I love
Enjoy
it.
the city.
How are you? What's going on? What's happening? How's the market? How's life? How's finances? How's the tariffs? What's going on in your world?
Everything's better after a couple Xanax. You know, you're mellowed down.
Howie, I was talking with somebody who's a financial advisor, and something that I know that you and Sully have discussed. We've all discussed here on the show before. These are the times where you just don't look at your 401k, and otherwise you're apt to walk into a buzzsaw. It's that bad. But this financial analyst said recently, go ahead and look, but strategize. Look and be smart about it. Look and ask the questions why, and then look and try to have a positive mindset as you're looking into what right now is probably not the greatest of news on the paper.
Yeah, I think there's something to that. Given one big asterisk, if you can pass this test, if you don't get sick when that number is more than minus 20 to the downside, there it is upchuck inducing, as they say.
Financial epicac.
Yeah, so people cannot handle it. So if that's you, I think that's exactly right. I think we talk a lot about daily market movements. I talk a lot about what's happening in the market this week, this day, the current event. But timing the market is always inferior to time in the market. You just set it and forget it. That's definitely the best strategy for most people. If you want to make moves, you got to really think it through, really be strategic. And if you have a lot of fixed income right now, then you're probably doing a lot better than other people. And maybe it is okay to make your 401k more aggressive, but it's also okay just to let your 401k be a long-term thing and you don't need to gamble with it.
Hey, Howie, I'm looking at, college, daughter starting college in the fall. We did settle on a UC school, so it won't be as expensive as a private school, but I'm going to need to tap in. I'm so excited, yes. So I'm going to have to tap into, some 529s. We have some money in a bond, but also in 529s, which I haven't looked at, but I'm assuming those are not going to be looking very pretty right now. So... What should I wait on though? I mean, I don't know. I'm just getting personal advice because what the hell?
No, I think this applies to a lot of people. A lot of people have their 529s as what they're counting on for their children's tuition. So let me just say, it depends on what your 529 is invested in, where it's invested. So if you have target date funds, you might be okay. So let's talk about that.
Okay, I do actually.
Howie, stay there because I want to know if the pain is over for now as far as what's going on with tariffs and the markets and stuff. We'll visit with Howie once again as the Big Biz Show continues. Don't go anywhere.
More tariff talk.
Tariff talk. here inside the beautiful Loft 100 studios, wherever you're watching, wherever you're listening. We're coming live from Southern California. Hope you guys are having a great day. We certainly are. Costa and Marybert Godwin with you. That music you hear is from the Day Trader Quattro.
Yep.
As we like to say, the best in the business. It's another special edition. It's called Nunya, when it's just Mary and myself holding down the con, driving the bus, as they say. Our financial analyst, our market analyst, expert, Howie Font, is with us here. Howie, can we say that the pain has subsided for the moment, as far as the markets are concerned, with all the double? Isn't it bad luck if you go double? Cross fingers, doesn't it have to just be one? This is really the important discussion.
They don't cancel each other out?
Okay.
What if you knock on wood and spit 3 times?
Yeah.
Yeah, I just worried about it cancel out. Okay, pain-wise. Pain-wise, are we kind of just gonna
be
okay for a while?
We have been drifting. I mean, even as I look at the week's market movements, we were worried that we were gonna kind of have like a Black Monday, referencing the Black Tuesday. The 80s. Basically, nobody knows. We've avoided another one of those big catastrophic 3-day spreads of 9% down.
Yes.
But could it happen again? It very easily could. We have not gotten a stable state recovery yet. We don't know if we're going to go back up to where we were. We don't know if we're going to fall anymore. And I know it sounds like I'm being tedious, but it really is, kind of shocking that we haven't arrived at one of those levels, or that we're not still falling, or we're not already back to where we were before. We saw after the election, for example, how quickly the market as a whole makes decisions on, the new facts on the ground.
Hey, Howie, is it just the tariff talk? I mean, not just because it's a big deal, but are there other factors that are, that we're looking at that are impacting the markets, or is it pretty much, this tariff talk and all the uncertainty with it?
Yeah, I mean, I haven't been hesitant to say what I think about how the tariffs were implemented, but I do think that there's a lot to saying the tariffs were just one market shock. There's a lot of leverage. We already knew that the market was overpriced, that it was valuing companies way too highly. So we had a market shock that shook out all of the borrowed money. It's called margin out of the economy, out of the market rather. And then the other thing that it did was create uncertainty around inflation, which means we're not going to have any more interest rate cuts, which means that's how it's affecting. So it's not the tariffs in and of itself. It's the lack of interest rate cuts that are now not going to happen in all likelihood. And it's, that we had all this borrowed money in the economy that has now been shaken out in the last couple days.
Howie, last time I was in New York City, I saw some hedge fund guys walking down the street, literally with bags of gold on their shoulders, walking over to houses to settle their debt. Some hedge funds are settling their debt with physical gold.
Yeah, so part of what happens when you have such a large drawdown in the economy is, these hedge funds, they borrow money to make their returns even higher because they're not making enough money,
Yeah, of course.
So when we had this drawdown, we had the largest margin calls from some of these hedge funds that we've seen since the Lehman Brothers in 2008. And that meant that the banks basically got to peruse around all their assets and say, I want one of these, one of these, one of these. And one of the things that they took, which is kind of hilarious and not really done, and it shows how the banks are, thinking about the economy, they took the hedge funds' physical gold. They took the bullion. They grabbed, the bars of gold and took custody. So that was kind of a wild story. I'm glad you mentioned that.
That's like George Lucas holding on to the what do you call it? The
lightsaber?
The advertise? No, not the.
That merchandising rights.
The merchandising rights for Star Wars.
Yeah.
Like, you guys go ahead and keep the tickets. Yeah, just give me the merchandising rights. It's probably not going to do anything anyhow.
Yeah. Oh, and I guess there's not going to be a sequel, is there? No.
No.
Hey, I wanted to ask, I guess there was some good news also with the 10-year bond that jumped. What is that? What is that? We need some good news to talk about that.
Yeah, so the long bond, the 10-year bond, is the rate that mortgages are based off of, credit lines, a lot of loans. So it's an important rate, and it kind of shows the measure of health that the bond market thinks for the U.S. economy. So, for example, if people are dumping bonds for a 10-year period of time, it means that in 10 years, they don't think the economy is going to do that great. They don't want to hold something that goes out all that way. They'll buy something that's more short term. So if you have a lower bond, then that's not a really good economic sign for our future. Maybe it doesn't say anything about our present, but our future is what it speaks to. It is good for the government, though, because that means they can issue debt at lower interest rates and they don't have to pay as much interest. But that trade is usually not worth making. So I was really excited to see that instead of the long bond going from 3.9 going lower, it went all the way up to 4.2. That means that there's still people that believe in the U.S. market, and that coincided with the stock market recovering back a little bit from its lows on Tuesday.
Howie Font's our Big Show market analyst. Howie, we know, like, when you have a stock market crash, let's say the great crash, where you couldn't walk down Wall Street because you might get hit from someone jumping out of the buildings when, fortunes were absolutely just lost. And we know how that creates a ripple effect, and it affects every walk of life. Are these tariffs having that same type of ripple effect? Is it worse than we think it is, or is it not as bad?
Well, I think you're right to think about the global impact. And that's exactly, tariffs have to do with global trade. We're very interconnected, just the U.S. by itself, very interconnected, important part of the world. But trade is it defines our bonds. So when we have an event like this, it's going to affect the whole world. One of the things that's really interesting to note, though, is as much as I've, kind of talked about the impact on U.S. markets, we, like always, do way, way better than everybody else in the market and in the economy. Like, we've been very lucky. We had a great COVID recovery, but we did well here, too. So I have, I think, a breakdown of how countries did. I think this is from Monday, and we had our recovery, so we were up 0.7. Japan's market was down 8%. The EU was down 5%. Hong Kong, Korea, Mexico, they're all down, and that was when we started our recovery. So we do have that kind of advantage, and that's important to note, just to give everyone a little more context.
On the converse, if we start, and there's a list for you. I'm glad I don't live in TSE. What does TSE stand for? Is that Taiwan?
Stock Exchange. Yeah.
Okay. Conversely, though, if we start seeing an uptick and things kind of get back to normal and stuff like that, I'm assuming, like they say, rising tide lifts all ships. Do these then see a reciprocal positive effect?
Yeah. Yes, but ironically, in capital markets, the rule is a rising tide does lift all ships, but it lifts. It lowers the U.S. less and it lifts them more. So we're at the top of the wave perpetually somehow. So that's the mental model most people should be using to think about it. We are lucky, and that has to do a lot with our international position.
So lucky. And even when you look at the size of the Chinese economy, the biggest capitalist communists on the face of the earth, do they look at what we're doing and just think, doesn't matter, we're just going to keep on plunging along like we have? I know that it's somewhat of a spitting contest now between the United States and China when it comes to the tariffs. Do you think they buckle?
Buckle, they definitely fight back. That is the $1 million question, Mike. I think that's really important to think about. It definitely hurts them, right? So they send us $500 billion worth of stuff every year. That really matters to them. They send about $3.3 trillion out to the entire world. $500 billion of that goes to the United States by itself. So our relationship is the largest, and it means the most to them. But this means that they have to now go try and partner with the Europeans more, or with the Indians, or with Africa. I mean, they have to try and shore this up. And one of the things that, I talked about on a previous show was by doing this all at once, kind of less organized fashion, we could have gotten our house together with Mexico and Canada, and then we could have gone to Europe and done a round of that. And then once we were all on the same side, we could have gone to China. But now China and the EU are working together to see how can we deal with these tariffs.
Big Biz Show market analyst Howie Font, assuaging your fears and making you feel better every single time he joins us. Right, Mary?
Right.
Howie, thanks, brother. Biz Show rolling on. We are inside the spacious and beautiful Loft 100 studios. It's Costa, Mary Godwin. Glad you are along for the ride. Of course, those four shining faces, part of the world famous Sullivan Band. It is a day trader quattro with us each and every show here on the Big Biz. Do you remember the movie? You guys remember the movie, The First Naked Gun?
Yes.
Where Leslie Nielsen is at that press conference in Los Angeles, and he's wearing a microphone like this, and then he wanders into the men's bathroom and forgets to turn his microphone off.
Did that happen to you today?
It happened to me today. Yeah. It happened to me today. And I'm in there, and there's literally a 4-person running commentary talking about what I'm doing.
Just now that happened?
It was a
Oh.
The DTC was going, oh yeah, Mike's in the bathroom right up, blah, 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 blah. Joining us right now is Joe Schmitz. He's the founder, CEO of Peak Retirement Planning Incorporated, and their website you go to, click on peakretirementplanning.com. We welcome Mr. Schmitz to the Big Biz Show for the very first time. Joe, how are you?
Doing well. Thanks for having me here today. Looking forward to it.
Thank you for coming on with us. Tell me how I can become, or am I already, a Midwest millionaire?
Yeah, and I'll tell you, I don't know where you live, but we have clients all across the country, regardless if they're in the Midwest or not. So it's more of a, some people think of it as a middle-class millionaire, or maybe the blue-collar millionaire. And so these are people who have worked extremely hard over the last 30, 40 years, and now have gotten to a place where they've found that they have wealth, and they may have been feeling like, I'm living paycheck to paycheck all these years because I have a family, I'm not making millions of dollars a year.
Sure.
But they always made room to save. And so now they're in this position where they're going to need more help with their more advanced retirement planning.
We're in San Diego, California. So, we're the land of great weather and great beaches and very, very, very high taxes. So we're kind of, we dream
gas.
Yeah, we dream about being those millionaire types, but then the paycheck comes, we see what everyone's taken out of it, and we can only continue to dream. Is it incumbent upon where you are in the country, Joe? I would assume that has a little bit to do with the security you feel as you get towards that retirement age.
Yeah, I mean, we're here in Columbus, Ohio, so we kind of hold those Midwestern values. And so a lot of our clients hold those same values, but they can be anywhere in the country. We work with clients in California especially, and they'll say, they're the Midwestern millionaire, but they'll put parentheses around the word mid, so It just looks like Western millionaire, so that works as well. So as long as they have the values, they're good people, hardworking, they're frugal, which to me means they're better savers than they are spenders, and they're people that have done all the right things over all their years, and now they're at a point where they want to enjoy it.
I want that to be me, but I think I'm a better spender than saver, unfortunately. Anyway, can you talk to us a little bit about the Tax Cuts and Jobs Act and where we're at with that and what that might be looking for the American people?
Yeah, I'd love to. And I know you mentioned you're over in California, so if you can see over my shoulder, see which way I lean, right there, there's my I Hate Taxes book that I also wrote, as well as the Midwestern Millionaire on my other shoulder. And so, our goal is here to help clients save as much money on taxes as possible. I've got a YouTube channel. Obviously, I wrote the books. We do a lot of articles in Kiplinger. And the taxes is one of the things we talk about most, and especially when it comes to the Tax Cuts and Jobs Act. I mean, that's a very interesting topic right now because it's set to sunset next year in 2026. But what we're expecting is it to continue on. I mean, we're seeing a Republican House, Congress, Senate. The president, probably a good chance it's going to get extended. And we don't know how long. It could be for 4 years, 8 years, anywhere in between. But for a lot of retirees, people enter near retirement, this could be a great opportunity to look at some more advanced strategies like a Roth conversion where you can utilize the tax brackets now, which a lot of people would consider historically low, and then look to get the tax-free growth on that moving forward. And so that's a big consideration that we're seeing a lot of people look at right now.
Joe Schmitz is the founder CEO of Peak Retirement Planning Incorporated, their website, peakretirementplanning.com. Joe, tell me something about this designation of certified kingdom advisor. Are you telling the king right now how to invest his money? What's going on there?
Yeah, so it's a credential that very few advisors have in the entire country, and it's for those who hold Christian values and want to do financial planning in a Christian way. And so it's something that is obviously very important to me, and being a believer and living out Christian principles and that's kind of the foundation of our firm and all too. So it gives people an opportunity that are looking for an advisor team that is aligned with their values and that is going to be able to have those types of conversations with them. We're more versed in advanced charitable strategies as well. And just having more purposeful conversations of our money, what it's used for. As I always say, we can spend it, we can give it, or we can gift it, but we can't take it with us. And so that's something we help a lot of our clients find out about. And again, the Midwestern millionaire, they're typically in a place where they can do that. They don't have to worry about running out of money necessarily, as long as they have the right plan in place.
Joe, talk about Social Security, possibly tax-free, et cetera.
Yeah. I mean, that would be an awesome thing. Wouldn't we all enjoy to have our Social Security tax-free? And so here's actually a stat for you. Right now, there's about, close to 50% of people that pay no tax on their Social Security when they receive their benefit. So it's really only the middle class and upper class that are really paying taxes on Social Security because of the way it's structured currently. But there is a chance it could go away. I mean, President Trump talks about this quite frequently. And to be honest with you, I thought this was going to go away as soon as it came up. But it keeps getting talked about. And, a lot of people wonder, can this happen? And it certainly can. The tax code's written in pencil. The government can do whatever they want. I personally do not think it should get passed or will pass, but it could. And, they can find ways to save money in other places to make up for the cost that it would, bring to them, because there's no tax revenue coming in from Social Security at that point. So it's something to pay attention to. I'm about an 80% chance it's not going to get taxed or it won't be tax-free, because if you look at the stats of Social Security, I mean, it's set to run out in 2033, which doesn't mean it will run out. It'll just mean that, everyone would get a 20% reduction in benefits there. So I think they're going to look to cut other areas, but that's probably not an opportunity that many people would consider as viable there.
Hey, Joe, one word that's been coming up a lot around here and in the country is the word tariffs. What are your thoughts on this? It's creating some volatility in the market, and how is it affecting people, and what are your thoughts?
I've got a really interesting take on this. So I personally think that the tariffs, long term, I'm actually a believer in it. There's some people that don't believe in it. A lot of people, studying economics are basically saying it's not a good thing at all whenever they hear the word tariffs. But here's what's interesting that the government's doing right now that's not really getting talked about much. There's $9 trillion that are getting ready to come due. $6 trillion of that will be due here in June of the government's debt. And so that's about 1/3, 1/4 of the government's debt right now. And so something that we know there is that interest rates are a little higher. And so what they're expecting to happen is interest rates could lower. And the way interest rates could lower is kind of supply and demand. And so what they're doing with tariffs is an idea with it is it's bringing the market down. And now it's allowing more people to want to get out of the market, go into treasuries, which is more protected. And now it's going to be able to lower the interest on their debt, which is going to save them about $1 billion per 0.01% or 0.1% every basis point. It's either one of the two. I can't remember the exact study I read, but you can see how all this works together. And so right now we've seen 20+% returns the last 2 years. We don't know what's going to happen, moving forward. And so a lot of people are thinking the market's inflated. And then this is just an opportunity for them to bring down this inflation of the market. And right now we're down about 15-20% from the market high, but we're right back to where we were a year ago, if you look at where we were a year ago. And we still have another 20% left to go before we're even close to where we were 2 years ago. And so, I was just trying to encourage people with all the tariffs and all the stuff we're hearing, stay true to your plan, making sure that if you need money in the short term, now may be a good time to protect it. But if you're not going to need it for the long term, as we always know, the market, over time, historically has always done what it's going to do. And you just have to stay true to what your plan is.
Joe Schmitz, founder, CEO, Peak Retirement Planning Incorporated. You can find him. He'll answer all your questions at peakretirementplanning.com. Joe. Loft 100 Studios, The Big Biz Show, and our affiliates and our hosts are not registered investment advisors or broker-dealers.
Our show hosts make no commitment that the purchase of securities of companies profiled or otherwise mentioned in our programming
are suitable or advisable for any person, or that an investment in such securities will be profitable in general.
Given the nature of the company's profile and the lack of an active trading market for the securities, investing is highly speculative and carries a certain high degree of risk.
We profile selected publicly traded and privately held companies on our program.
Most of these companies that we profile have provided compensation to Loft 100 Studios and its hosts for the profile coverage.
From time to time, we sell shares of the companies profiled in the open market that we receive as compensation for coverage of client companies.
But never sell stocks if we are speaking about interviewing or covering a public company who has paid compensation.
Specific questions on compensation can be obtained by contacting producer at sulliantgroup.com.
Listeners should verify all claims and do their own due diligence before investing in any securities mentioned on this program.
Investing in securities is speculative and carries a high degree of risk.
We encourage our investors to invest carefully and read the investor information available at the websites on the
Securities and Exchange Commission at sec.gov and or the Financial Industry Regulatory Authority, FINRA, at www.finra.org.
I like it.
Hey, is that a rescue plane?
Big Biz Show rolls on live from the Loft 100 Studios. Wherever you're watching, wherever you're listening, appreciate you being along for the ride. All those beautiful faces you saw up on stage, of course, that is Sullivan. 8/9 of Sullivan. Sully not with us today, but still. Pleasure to have them in studio with us. Of course, Mary Bert Godwin with me here for another edition of Nunya as a Nunya business. When the three of us are holding down the fort.
How many?
8/9 of the Sullivan Band.
Oh, I thought you said the three of us. I said there's only two. Here.
No.
Okay.
Before we get to our friend Mitchell, Dr. Mitchell Steiner, is the birthday officially done over?
Well, it is still March, so it's kind of my birthday month still.
Okay, anyhow, joining us right now is and we love talking with this guy. He is the chairman, CEO, president, and founder of Veru Incorporated. Their ticker symbol is VERU. And Dr. Mitchell Steiner back with us here on the Big Biz Show. Dr. Steiner, always great to see your face. Always great to talk with you, sir. How are you this morning?
Doing great. Thanks for having me again.
Reading up as we've got to know you, we've got to know Veru, and kind of being clued in as to how many people are, for lack of a better term, fighting the battle of the bulge here in the United States. I'm not sure what the numbers are worldwide, but 1 in 8 are taking some sort of weight loss drug to combat that.
Yeah, that's exactly right, and it's a big issue because the whole world's going to change from how we eat snacks without craving to getting better with the cardiovascular side effects. And the best thing about these drugs is they actually work. They actually provide benefit for patients, particularly if you look at all the health-related issues with obesity. But it comes with a price. And the price is they have GI toxicity, meaning they have nausea, vomiting, they feel sick all the time.
Right.
But more importantly, the GLP1s, which is what they're called scientifically, these weight loss medicines, what they do is they non-selectively cause the loss of weight. Non-selective meaning that you lose fat and you lose muscle. Everybody wants to lose fat, but to lose muscle is not good, and that rate's about 60-40. So 40% will be lean mass and 60% will be fat. Wouldn't it be nice if you had something that can do 90% or 99% fat and leave the muscle alone? And that's kind of where Veru comes in with our drug enobosarm. And so the first big problem people have is they want to lose weight. And lose weight meaning lose fat, not lose muscle. And we did a phase 2B. Reported the results back in January that showed the net of it is that people lose same amount of weight on that GLP-1 with the enobosarm in combination, but the weight that they lose is about 99% fat. And so we hold on to the muscle.
Dr. Steiner, for a second, when I go in for my yearly physical and they do my body fat index thing, it comes back and it just says canned ham. I mean, that's how out of shape I am. Are we in the United States, is there 1 in 8 people using this because food is so unhealthy? Fast food and junk food are always right there at your fingertips?
Well, of course, we have a food epidemic, but the problem is obesity is a real disease. And that's part of what we have to understand. Why are some people not overweight and other people are? And unfortunately, it's a spiral. Once you start getting some weight on you, you start putting more weight, and you become resistant to the signals that your brain tells you not to eat. So it's a true disease, and they need help. And that's where these GLP-1s come in. So it's good that 1 in 8. Hopefully we'll get the obesity problem under control, and people will feel healthier, live better lives. But it's not going to be just with GLP-1s. It has to be GLP-1s and other things to make the journey more tolerable.
Dr. Mitchell Steiner is the chairman, CEO, president, founder of Veru Incorporated, their ticker symbol VERU.
Dr. Steiner, now talk to me. I was reading about the phase 2B that you just mentioned, and you said you went to an extension study with those same candidates. What are you seeing happen with them, and then what's the next step with these candidates?
A shocking number is that people should stay on these GLP-1s, but about 80% don't after about a year to a year and a half. So
why is that?
Well, because of side effects, access to potentially expensive medicines, they feel weak, and but the net of it, the insurance data clearly shows that about half to about 80% will not continue. And so we're running a study called the extension study, because the next big question is, once you get your weight down to a place that you want to stay, and you stop with GLP-1, what happens is that you go into this overeating cycle, and you get back to the muscle that you lost. It doesn't come back the way it did before, but instead the weight that comes back, almost like before, is all fat. So you get this fat regain. And people get very frustrated because they lost the weight. They want to come off the medicine for whatever reason. And then they find out they get the weight back, but they're worse off because it's all fat. So the extension study is trying to show the reason why people get that fat regain is because they deplete muscle. Muscle goes away. Your body goes into a self-preservation mode, saying, I have to stay alive, and sends a signal to the brain to eat. Now you get rid of the GLP-1 that's telling the brain not to eat, and you have the double whammy. You have your muscle saying eat, and you have the drug that told you not to eat gone away. And so you overeat, and you get back fat and not muscle, and that's where people are getting frustrated. We believe that enobosarm has the ability, by leaving muscle alone, gets rid of one of those eat signals. And if you get rid of that eat signal, then the hope, when we get our data in the second quarter this year, is that we show that we can blunt that regain of fat that happens when you stop a GLP-1. So you have an off-ramp, as they call it, as opposed to just crashing and getting the weight all back in fat. So that data, as I said, in 168 patients that was enrolled in the study, that data is expected in the second quarter, and the goal is to show that we can blunt that fat regain.
Now, doctor, are patients encouraged to also do a certain workout routine to help combat the loss of muscle and fat and all of this stuff, and so they don't regain it back obviously we are all told to work out daily and do these things, but is there a certain prescription that you're seeing works in conjunction?
The prescription. If you can, and the problem is nobody sticks to it, but if you find the odd person that sticks to it, meaning they eat protein and they do resistant exercise, they get a soft landing. So what that's telling you is that muscle must be important for that soft landing or that ramp, off ramp. Meaning that if you build muscle, bring muscle back on after you stop a GLP-1, that will stop the fat regain. But the problem is, the same reason why people are taking obesity drugs is that it's very, very hard to keep up that kind of routine. And so for the majority of patients that just can't do it, to have a drug like enobosarm that in some ways acts like exercise in a bottle, if you want to call it that, exercise pill, it allows them to build back their muscle. And as long as they're eating protein, and change their body composition to be maintain the weight, and if they gain a little weight, it's muscle weight and not fat. Which, remember, fat's the enemy.
Yeah, love that.
The company is Veru Incorporated. He is Dr. Mitchell Steiner, Chairman, CEO, President, and founder. Of course, their ticker symbol is Veru, V-E-R-U. Dr. Steiner, always appreciate the visit. I love the fact that he's helping people with this, but it always makes me feel so bad about myself.
Same.
All right, much more to come with the Big Biz Show. Keep it right here. Sullivan, missing only Sullivan as the Big Biz Show rolls on. Live from the Loft 100 studios. Wherever watching or listening, thanks for being along for the ride. Costa and Mary Burt Godwin with you today. Another special edition of Nunya. Nunya Business is what we call the Big Biz when Sully and Greg are not with us. And the birthday celebration.
The birthday month continues. Well,
So
because
does it-
I was
okay, is
actually,
there-
here's the deal, is I was actually at a dance competition over the weekend with
Did
my
you win?
daughters.
Oh, your
My-
daughters. Okay.
Yes, I would have won, but and so it was fun, but I didn't. It was not. It wasn't all about me. So we
So
are-
it was boring.
No, so we're going on a little vacation, and we're going to
okay.
New York, and we're going to some theater shows. So that's going to be my actual
The culmination.
a whole full week of birthday celebrating in New
birthday.
York. Yeah.
All right, very fun. When are you going? Like next week or
Soon,
something?
yeah.
Okay, good for you.
So I'll be gone.
Yeah. I know I speak on behalf of everybody with Loft 100 Studios when I say we are so glad it's coming to an end. Oh my God. You know what's not coming to an end is the price of gold. Look at that segue.
Good work. Good work.
Yeah, thank you very much. I get paid the
We
big
need
bucks
it
for
even
that.
more right now, I think.
We do. Joining us is Mr. Alan Hibbard, precious metals and alternative money specialist. His company is Gold Silver. Website goldsilver.com. Alan, welcome to the Big Biz Show. We certainly appreciate you jumping on and talking some gold with us. How are you, sir?
I am great. Thank you so much for having me today. Really appreciate it.
Yeah, before we talk about prices of gold and where to go and get gold and stuff like that, is it finite as far as the supply that man knows of in the world, or do we really have a true gauge of how much gold there is if we haven't really been able to explore every single square inch of the earth to find it?
Yeah, it's a great question. And actually, your question sort of hints at why gold is even a store of value in the first place. So I would argue that the supply of gold is essentially infinite, but for practical purposes, it's capped by our ability to go out and get new gold. So the reason that gold is a store of value is because some of it is accessible to us, and that's relatively easy to get.
Sure.
And some other gold in the future is going to be a lot harder to get. We're going to have to spend much more energy to get it. And so as a result, anyone who has kept gold until that time is going to be able to sell it at that new higher price, representing a higher cost of getting new units. So the supply of gold is essentially limited, and that's what makes it a store of value.
Hey, Alan, I want to ask, in this climate of, the market is unsure, what's going on with, all the things are kind of uncertain in question. So, there's cryptocurrency out there. All the things are happening. Inflation. Now, how does that affect gold and silver? Does it bode well for your industry?
Yes, absolutely. It bodes well. And I think that's why gold and silver have both had fantastic years recently, outperforming the S&P, for example. And so, whenever you have a period of uncertainty, people start to cling to something they can control, something they can get their hands on, something they know isn't going to disappoint them down the road. And if you look at so much of what's happening in the world, we sort of have a crisis of leadership really everywhere. And that accounts for leaders of countries, leaders of other institutions who have, broadly speaking, either been negligent, to put it nicely, or outright corrupt, right, in the worst of cases. And that's across the globe. So, of course, there are standout exceptions, but broadly speaking, we have a failure of leadership. And when that happens, people turn to something that doesn't have a leader. So gold doesn't have a leader. There's no one in charge of all the gold. And same with silver, for example, and same with Bitcoin. So if you're unhappy with your leadership, if there's uncertainty about how they're going to behave, what kind of rules they're going to enact, whether or not they're going to enforce those rules, and if they're going to be good or bad for you and your family, you can really just take a lot of uncertainty out of the equation by going to something that doesn't have a leader, that can't be corrupted. So that's gold, silver, and Bitcoin. So that's really good for our industry.
Alan Hibbard, precious metals alternative money specialist. His company, Gold Silver. Their website is goldsilver.com. Alan, what's the craziness going over in London? What are they experiencing with gold?
Yeah, they're getting rid of it, basically. So in London, they're selling a lot of their gold. They're selling a lot of the gold off the LBMA, moving that to Switzerland, refining it for bars that are acceptable in the United States, and shipping them to New York. And the reason for that is that there's one or more large investors in the United States, and we could speculate who that might be. It might even be the federal government, who are going to take physical delivery of gold sometime in the very near future. So the gold stockpiles on the COMEX have gone from roughly 10 million ounces to 40 million ounces. It's gone up by a factor of 4 in just a few months. This is basically unprecedented. It happened during COVID, but that was the first time. So now it's happening again. So that means somebody is taking a lot of gold in physical delivery, and it's coming from London. So we don't know who that is. It could be the U.S. government preparing for an audit of Fort Knox. We could speculate about that. But either way, it means the price of gold is moving up, and that's probably going to continue for the foreseeable future.
So that segues into my next question, which is about silver. I was just mentioning my kids' dance competitions. Silver is below gold in the medal or the awards category, the Olympics everywhere, in dance categories too. So, but right now, silver is looking like an attractive buy. Is that correct?
Yeah, I think so, definitely. So while gold is at its all-time high, over $3,000 an ounce, silver is still below its all-time high. So you could think of it as being on sale. It's almost like a 33% discount. So if you like the product, it's better to buy it on sale, and that's definitely silver right now. And historically, silver outperforms gold during these bull runs. So it does ultimately rise a lot more in price. However, you pay the price of volatility. So if you're not happy seeing the ups and downs day to day in your portfolio, maybe silver isn't a good fit for you. Also, you tend to have to wait longer to experience those gains, but they are bigger over time. So I think gold and silver are both attractive right now. I have both in my portfolio, and they're both good picks for most people.
Alan, if I go to goldsilver.com, can I physically buy bullion from you?
Or a big brick.
Or a big brick, or a nose ring or something like that?
You can, yes, if you go to goldsilver.com, you can buy coins and bars of gold and silver. They're all investment grade. So you're not going to get scammed. You're not going to buy anything that looks like it's, investment grade gold, but then it's actually only a tiny fraction of gold. No, we don't do that on our website at all. There's no collectibles. You don't have to worry about numismatic value. It's all investment grade stuff. And you can even get stuff for your IRA if you do it before April 15th.
Will you do me a favor? Will you promise to come back on our show? Yeah. We do not have an official Big Biz Show gold person. And what you were just able to explain to me, someone who's got nothing but cement between his ears, not gold, I'm like, all right, I know exactly what he's talking about. Yeah. Will you come back on with us, please?
I would love to. Thank you so much.
Alan Hibbard, precious metals and alternative money specialist, goldsilver.com is his website. This show has been gold because we have Sullivan in studio. We have everybody who makes the show possible behind the scenes. For Mary Britt Godwin, I'm Mike Costa. Thanks for tuning in to the Big Biz Show. We'll see you again next time.